Hello and welcome to Ask Deb About Business. I'm Rom Gayoso, co-host. We're broadcasting via Futures Television, the home of the future on television. If you're watching this show on Futures Television, listening to it on Radio Futures, or listening to it as a podcast or as a recorded event on one of the social media platforms, you too can be part of the conversation. Just visit our YouTube channel, and that is IMCI Magazine, where we continue to chat about the topic of the day. You can also access this information on our website, and that is www.futurestelevision.com. So don't be shy. Today, our topic is how to accelerate the growth for your business and how to attract new investors. Business owners need to fulfill their promises to the investors, round after round after round of investments. This requires extreme precision in go-to-market plans. It is not just about the SEO, the MQIs, SQLs, etc. It is about a robust commercialization and monetization strategy and plan focused on the target markets, segments, and personas. There's a lot of to talk about on this topic, but when you know more now, you have someone to talk to. So before we get started, let me say a few words about the show and a few words about Deb. Broadcasting live from Butterfield Studio in Chicagoland to the world, I would like to welcome you to Ask Deb About Business. The talk show is broadcast every other Thursday at 11 a.m. Central Time, where I join Deb Dietz to discuss a variety of business topics. So no matter what your venture is, you will certainly have questions. So let me say a few words about our show host, Deb Dietz. Deb has a long and distinguished career as a coach, mentor, and through her awesome training programs at SMB Digital Education, she has enabled many entrepreneurs to follow their dreams. And that's exactly what I like about her. It's her ability to deliver practical advice to help you solve real problems. So if you have a business question, let's ask Deb. Well, without further ado, let's welcome Deb Dietz to the show. Hello, Deb. How are you doing today?
Hey, Ram. Good morning. How are you doing?
Wonderful to see you in the beautiful studios.
Here we are again in Butterfield Studio, our home. We're delighted to be here, and I wanted to do a shout out to Jeff Horvath and the Butterfield team for this beautiful set and for making us look and sound so great. So thank you, Jeff and the team. And welcome everyone to the show. Wherever you're watching or viewing from, we're happy to have you with us today. Our show focuses on emerging trends, challenges, and opportunities that face small to mid-sized businesses, business owners, business leaders, and business professionals. And we invite subject matter experts on our show, experts on those topics. And my promise to you is that by the end of our time together today, you'll have at least one key takeaway that you can then implement within your own business. So today's show will be providing practical guidance, practical tips that you can then make actionable this afternoon. So we're happy to have you with us. And today I'm delighted to welcome Hector Barresi back to our show. Hector was with us a few months ago. We had a great conversation about leveraging technology and innovation strategies for small to mid-sized businesses. You can find that show on our YouTube channel. Go to IMCI Magazine on YouTube. Look for the show with Hector. That was such a great conversation. And today we're continuing the conversation with Hector, talking specifically about how you can drive short-term growth to make yourself look appealing to potential new investors. And we're happy to have Hector back with us today.
Wonderful. So before we get started, let me say a few words about him. So Hector Barresi is a two-time award-winning innovation expert who helps industrial companies create and commercialize breakthrough products, software, and services worldwide. He has transformed global organizations across the world to create effective and collaborative teams that consistently exceed their business targets. Hector offers a wide range of programs and services, from individual consulting and coaching to workshops, seminars, and keynote speeches. He helps CEOs, product development executives, and teams to apply the latest technologies like IoT and artificial intelligence and develop innovative and differentiated products. His proven processes and systems generate rapid product demand and sales. But without further ado, let's welcome him to the show. Hi, Hector. How are you doing today?
Hello, Roman and Debbie.
Hector, so nice to see you. Welcome back. We're so happy to have you here.
Thank you, guys, for having me back again.
Absolutely.
It's a pleasure to be here again. Hello to the audience, wherever they are in the world. Good evening, good afternoon, good morning, everybody.
Absolutely.
Well, again, big pleasure to be here talking about a subject that I'm very passionate about and where you can also provide a lot of practical advice, like you just
thank
said,
you, thank you for that. And I think today's conversation is really focusing on, making sure that your go-to-market strategy, whatever it is generating the growth that would then make you look appealing to potential new investors. And so I think we should start the conversation talking about go-to-market strategies, because I want to make sure our audience has an opportunity to hear, you define exactly what that is, because while you're going through kind of an explanation of this, I want our audience to think about their business strategy, and maybe the term go-to-market strategy may be a new term. What exactly is that? And then you can think, those of our business owners out there, business leaders, think about your current business strategy and what you're going to hear Hector define this term, what it means, how it relates to you, and the strategy you have to drive growth within your business. Because all of us as business owners are looking to generate growth, generate incremental revenue, find ways to become more profitable, certainly, but also looking for ways that would make us look attractive to potential new investors. And regardless of where we are on our business life cycle, there are going to be many that are just starting out. There are going to be many that are in the early stages of their business, and certainly those that are in the mature life cycle.
Exactly.
Their funding needs are going to be different, and all along that journey, they need to be looking attractive to potential new investors. So let's start with the definition of go-to-market. How would you define that?
Sure. And interesting when you talk about the go-to-market, because investors obviously look at that as an important element of the company, but it's kind of the late stage result or consequence of other things that occur in the company, right? The go-to-market is the representation of what the vision of the company is, what the value proposition of the company is, and the message that the company has for the potential customers. So I think Ron just made reference when he started that go-to-market is not just about SEO, pay-per-click, and conversion rates. It's a much broader concept that if the companies do not understand and grasp, then it really fails, because really the go-to-market is a summary of different elements. Like I said, first of all, what is your value proposition? What is the product that you are selling, right? And what problem does it resolve? And to what particular market are you going to sell it, right? And within that market, what specific segment? And at what price are you going to sell it? How are you going to sell it, meaning direct or omnichannel or online? How are you going to charge for this? Are you going to offer services? Or you're not? And you need to combine, it's a mix of strategic preparation and then all the tactical deployment of all these activities, right? So the go-to-market is really a relatively complex stage of selling a product that some companies kind of misunderstand, and they just think that you're going to put this on their website, or we're going to do some promotion on Google, and we're going to expect the orders to come, right? But it's a strategic and tactical combination of, again, the value proposition, the positioning of the products, the targeting of your markets, the channels, your pricing, and overall your business model, and support and service. So it's a lot of things. It requires organization, it requires planning and tracking, and you need to be able to react or pivot your strategy if the things are not working as expected, right?
Absolutely. I love that. And you started the conversation by talking about, you said the word vision. And to me, the vision, your ability to articulate kind of where you're headed, what you aspire your company to ultimately become at some point down the road, is kind of the starting point. Is that a fair statement? And you have to be able to articulate that before you can, all these other building blocks start to take shape, right? So explain how important the vision statement is, and that, and that's obviously something potential investors are going to look at. But kind of the first thing, and I, recently, have been developing my own pitch deck and, for funding for my business, and our starting point was the vision statement. Is that kind of a good place to start?
Exactly,
for
exactly.
Okay.
And we're going to split it in two elements.
Okay.
First of all, there are many reasons why some companies fail, especially early stage companies. There are 12 main reasons. One is they run out of money, the other one is the product is bad. But among the 12, the lack of vision, of losing the vision of the founders, by the founders,
Okay.
is a cause of failure. So first of all, not being able to keep your vision or having a weak vision for your company is a cause of failure. So founders and small businesses, owners need to understand that the vision is the fuel behind everything else that you do for your company and in your company. So the vision is that important. Now, from an investor's point of view, they expect the same. They expect, if they're going to invest money in your company, they want to make sure that you are 100% clear on what your vision is. And this vision, at that level is, for example, we want to get to net zero by 2030, and I want to be one of the top contributors to that with my company's products. Or we want to eliminate tumors or cancer. It could be anything. The visions also have to be significant. Investors want to see a vision that is transformative, that makes an impact, and it's not just a me too vision like everybody else. Like, hey, I'm going to create an e-commerce business to sell groceries online. That is not a vision that someone really will find original or impacting because it already exists. But making important impact on important problems and being able to convey that vision to your investors is critical. And then maintaining it throughout the creation and the growth of your company is fundamental to the survival and the success of your company.
So all the way down, through the process of developing your business strategy and implementing your strategy, you always have to have this in mind, right? In order to keep yourself sort of, so you're not, veering too far afield, right? So you're maintaining that focus. And then having that vision, permeate down throughout the organization and holding people accountable to that.
Accountable, and if your vision is not somehow in your go-to-market plan, because it got lost somewhere, and then you need to go back. And if your story, your value proposition, the product, the customers do not represent what your vision is all about, then you really need to adjust it, because then there is something that got disconnected in the process. And obviously, the organization has to resonate at the same frequency.
Absolutely, and I would also imagine that investors are looking at, trying to understand what solution you're going to be developing or providing that solves a particular market need, right? So your go-to-market strategy should really well articulate and have a problem statement, I guess. Would that be a fair statement? What is the need in the marketplace? What is the problem you're attempting to fulfill by implementing this strategy?
Yep.
And I think that there's an opportunity for improvement. I see a lot of business plans and strategies working with SMBs, and the clear articulation of the problem and why your solution is the right solution to solve that problem is something also that investors would be interested in looking at, right?
And it's like at least three phases where you go from the 10,000 to the 1,000 to the 100 feet, where you say, well, this is the vision. Let's say we're going to get to contribute to net zero by 2030. We're going to do this by reducing the number of coal-fired power plants. That would be like your value proposition. And then the third level is, what is the product all about? Because if this is the vision, this is the value of the vision, but how are you going to do it? Well, we're going to create this technology that replaces coal fire with some hydrogen or fuel cells or whatever it is. So you go from the vision to the value proposition to the product. And then ultimately the investor wants to see proof, right? Is that product real? Have you built it? Do you have a prototype? And show me the numbers, right? So you go really from a very generic, very conceptual to a much more practical.
More specific. So you're very kind of generic to very specific. Here's the product, the definition of the product, or the solution, if you will. Clearly articulating its value to solve, its ability to solve that problem or that challenge. So that's something that needs to be clearly articulated.
And
what is that, and the details behind it, right?
And quantifiable.
Quantifiable.
I want to see numbers, and then if I want to see proof, whether it is a test, a patent, customers supporting you, prototypes. And again, you're going from the very generic conceptual to something that is practical, because the investors want to give you money for something that's specific, that can be done, that is feasible, and where there is interest in the market.
So there's the need in the market, and then the product or solution is going to fit that market need, and they want to see something. For example, if you're developing a new product, they want to see that the specifics of what that new product development process or solution will look like, right? So that's, you need to be able to articulate that well.
Exactly. And the process, again, it doesn't have to be complicated at the beginning. In order to make an intro pitch to an investor, it could take 2 or 3 minutes just to get a feeling of what you are doing, and they can feel whether or not it resonates with them. Because there are investors that specialize too. I mean, there are a lot of investors now specialized in life sciences, medical devices, non-invasive testing, early cancer detection. And so there is now a whole niche of investors focused on that. Others are focused on Internet of Things. Others are focused on artificial intelligence. So you also need to kind of direct your pitch to a specific investor segment that you want to get, to invest in your company.
So you have to target not only your customers eventually, but you have to target your investor base, the prospective investors, those folks who might be most interested in what solution it is that you're providing.
And the big 2 segments are B2C, business to consumers, business to business, and then from there you go on and you keep splitting. And there are like the small, angels and VCs, and then more of the private equities that are focused on larger stage companies. So you want to focus also on the right level of investors and the segment and the story. And again, you have to be able to articulate it in a way that they see that the vision is there, that your idea is original, it's not a me too, that is feasible, and eventually that you already have customers waiting for it, right? The best that you can say is, my customers are already waiting, I need the money, your money, to start manufacturing this, right? That would be one of the best ways to ask for money.
So you have to be able to quantify the market opportunity, right? And so, to your point about there may be customers in kind of waiting for you to develop and implement and offer your product. But, there's a lot of work to be done in understanding the need, kind of the notion of business intelligence and taking in all these, data points in order to articulate what a good solution could be, and then formulating your plan to implement and execute. And the investors want to see that. They want to see that path. Is that fair?
Yeah. And not only that, I mean, you can pitch a market size to an investor of $10 billion, right? And then the next question is, okay, how much of that 10 billion is available to you through your channels, through the capabilities of your product, your pricing. So it's not just how big the market is, it's where can you win, where can you sell. So the investors really want to understand that, and the organization of your company is critical to that, because if you do not have sales force, if you don't have, again, a robust go-to-market strategy, the market is going to be out there, but you cannot even scratch the surface.
And you may find that there's a niche in that very large market that where your solution will be the best solution, and where you can capitalize on the opportunity to generate short-term revenue. So it's great to have this great market size, but if you are able to articulate and kind of niche it down, That's something that they're looking for. They're looking for how you differentiate yourself from others. So that's what I'm hearing you say. You know, not just another one. It's you're providing something that's unique that nobody else is doing, and those are the types of solutions that investors are going to be looking at.
Exactly.
Okay.
And the more niche oriented it is from a market intelligence, the stronger your message is, because the investors will say, okay, these people did their homework. They have really understood what the market is. They are starting, small. They're focusing on a specific niche, and so they can realize that you know what you are doing.
Okay.
Right. So getting to that level of detail of business intelligence is probably one of the best things that you can do. And again, it's part of the go-to-market.
It is
right?
part of the go-to-market,
So,
and we talked a lot about this in the last, the last time you came on the show,
Yeah.
where we were talking about the importance of taking those external points of view into consideration when you're sizing an opportunity or you're creating a business strategy, or in this case, creating your go-to-market. You have to kind of move outside of the four walls of your business and look externally so that you can identify the opportunity to begin with and then quantify it. So you spoke also about about messaging and the value proposition, and so the ability to message around that is also critically important as part of your go-to-market strategy. But your message has to hit the point in a very concise way, because you don't have the attention spans are very short of people that are reviewing this material, right? And so just my personal experience developing pitch decks is, you have to communicate that very, very quickly. Otherwise, they're going to move on to the next person.
Absolutely.
So
and I was speaking recently with a company that's developing called a fitness machine, which allows athletes and future athletes to measure their current capabilities and future capabilities, athletes, and in terms of speed, muscle strength, growth, etc. And so the situation with this person was, well, I want to sell it to colleges, universities for all their, and he said, we have 500 athletes per university, and we have so many universities, and he quickly got to like $10 million. And then he said, and we're going to sell it to the sport clubs, and there are so many sport clubs, and so many, players per, and there are the Olympic, athletes. And I said, okay, now you're already making this kind of a very big market, and
right.
Each one of these markets requires a different story and a different product and a different message and positioning. Let's start focusing and getting, into specifics, because you can't do everything at the same time.
Right.
You are right now starting. You need to figure out what the best strategy is, and to your point, these people need a very clear message very quickly, and it's not the same for a college as it is for an Olympic athlete or for a sports club, right?
Right.
So what's the message? Where are we going to focus? So it's the message, and it's also, again, going back to targeting that particular segment with strong message before you really start switching and going everywhere else with another message and getting completely distracted and diluted.
It's interesting. I love that. And you're talking really about segmentation and identifying specific personas, right? So not all, customers or prospective customers are created equal, right?
Mm-hmm.
So, but you may have an opportunity. The market may be this big, but you need to find the most appropriate and niche down, is which we talked about a minute ago. But by doing that, then you're able to clearly align your value proposition. You're able to then align your messaging. Then you can start putting together your marketing and sales strategy, and your go-to-market strategy becomes very clear when you're looking at it. I almost think of it as if you were developing a grid, you could have, on the x-axis, you could have your different segments.
Mm-hmm. Yep.
Segment A, segment B, segment C.
Exactly.
On the x-axis and on the y-axis, maybe are all your variables, right? What the needs are, how what your product might look like, what your pricing strategy might be, what your messaging. What is appropriate messaging, what your distribution channels are, on and on and on. So that's a great way. It's a great tool. It's a practical. We're a show about practical guidance, that's a great tool, is to
It's a
develop a
fantastic,
spreadsheet
great
like that
tool.
that has the, your personas on your x-axis and the variables on the y-axis. And at the end of the day, when you're done taking in all your research and business intelligence, plus your own, what you're going to be doing internally, put all that together on one document. Is that your go-to-market strategy on one page?
It's a one-page go-to-market.
Yeah.
You can also allocate scores to the different markets or niches and
Okay.
prioritize.
So you could weight.
Exactly. This
Okay.
has a 70% growth potential right away. So we're going to start here, and you substantiate that again, going back to the research, right?
Yes. I love this because I'm thinking, when you're putting together your business plan and, when you are pitching to investors, you're sharing your business plan with them, your revenue forecast, all of that, right? Your operating budget, all those good things. So you want to show that you're thinking this big, but you're practical as to what you can actually affect this year, next year, the
Correct.
following year.
Exactly.
So you want to kind of paint a picture of the opportunity over time. Right, so that shows, okay, they're growth oriented. They're thinking of not only today, what they need to, the positive change they need to affect today, but what can come after today. Year 2, year 3. So that's also important for an investor to see that you're thinking of that. That's the roadmap.
The investors know that you can't do everything at the same time, simultaneously, and they hate a pitch where they say, we're going to go all over and we're going to go to every market and to every segment, and we're going to deliver to all these different customers. They know it's not
possible.
It's not very possible.
Right.
So they tend to walk away from that type of pitches, right? So very important what you just said. Second is they're going to ask you, what's your business model? Meaning, how much are you charging? How are you charging? Now it's becoming increasingly popular, the SaaS models. So a lot of these products have a SaaS component into it, and it's how much are you going to charge per user? Like this could go from $10 per user per month to $100 per user per month, and they're going to ask you, why do you think that the customers are going to pay for that? And how many users are you going to have? So you need to be very clear when you put together all these metrics that we're talking about. The business model has to include
the financial business
the
case.
financial part of it, and how much you're going to charge, and again, the justification of why you think that you can charge that money.
So
Very important.
again, comes back to the research that you should have done, right? It's putting together your business strategy.
Yeah.
Okay.
Absolutely.
Well, so back to metrics. So when you're measuring, this process, what are some of the key performance measures that investors would be looking at? Well, what were some of the key ones that they're looking at? Maybe financial metrics, customer-related metrics, operational metrics, maybe team, employee metrics, because I would imagine they want to see the measures as it affects the entire organization, like a 360-degree view of the measures, right? How you're going to drive accountability. So what would they be looking at specifically?
And again, they want to see that you as a business owner, you know how to manage your business, right? So having the right financial metrics is absolutely clear, whether you call it KPIs or a dashboard,
Right.
But obviously, again, as an investor, from a customer or financial point of view, you want to see, do you have a pipeline already? Let's say your product is brand new,
Okay.
right? Do you have a pipeline for the next 2 or 3 years of specific customers? What does the pipeline look like in units or in dollars, for example? They want to see your ability to manufacture the product. Do you have already a product cost calculated, updated after all these supply chain issues? How current is your bill of material and the cost to manufacture, the cost of labor? All that has to be clearly documented and being current. They want to see that all your suppliers and subcontractors have been clearly identified, and you know who they are, and tomorrow you need to start producing and delivering your product. They want to make sure that you are ready to ship product out, because this is the moment where you really start making money. Having prototypes, having patents, and having a bunch of PowerPoint presentations does not, generate revenue, right? The investor want to see that you are able to ship. So, again, what does this pipeline look like? And if an existing product, still, what does the pipeline look like for the next 2 or 3 years? What does the cost look like? And then, who is behind? What is the cost of your overhead? What are your organization cost you today in terms of engineering, sales? What is the cost of sales? Cost to develop a product? How much are you spending in marketing? The return on sales, return on,
So they're going to want to see certainly your sales forecast and all that, but they also want to see, your operating budget, right?
Yeah, absolutely.
So because you have to justify, if you're asking for a specific, capital, if you have to quantify the capital need, right, that you're looking for, whatever that is.
No, they want to know, you need the money for manufacturing.
Right.
You need it for, today is really I need to hire 10 more data scientists, for example, or I need to deploy an online multi-channel or omni-channel. They want to know exactly where the money is going to go and connect that to your growth strategy. They have to be coherent, right?
Right. Okay. So there are many different ways. Investors are looking at certainly your customers, the type of customers that you're targeting, the rationale for that, within the specific niche, as a best practice. They want to see that you've paid attention to the competitive landscape, right? Because you have to look for ways of, you said at the very beginning here about your uniqueness. You have to show a unique solution, not just another. You need to show your ability to differentiate yourself and why you're special. It's like, what's your secret? You used a term before about, see what your secret sauce is. That makes you so special that someone would say, okay, you're going to be my solution of choice versus someone else. So that's important as well.
Understanding what your competitors offer, and differentiating, obviously, successfully, right, from them is one of the things that attracts a lot of investors, because they see that there is a future in what you are doing, because it's not a copy, cannot be challenged from a patent point of view, a number of reasons. So you need, again, going back to doing your homework, understanding your competitors, looking at how well they satisfy an existing problem in the market, and you satisfy it better. Coming back to, again, medical tests and disease prevention, detection, there is a lot of, CAT scans and all sort of technology that require very expensive machines, and sometimes takes days or weeks to detect a disease. If you come up with a non-invasive, low-cost, immediate test, you are completely differentiating from your competitors from a cost point of view, speed to detect, simplicity, invasive versus non-invasive. So there are 4 or 5 ways to differentiate in your product in the area of life sciences and biomedical, but it could apply to anything, right? But typically you differentiate in the way that you use the product, you differentiate in the price of the product, you differentiate in the way that you deliver the product. Sometimes it's the same product, but the way that you sell it or your business model is different or better. So understanding where you differentiate is critical, and it's not always about the product itself, it's about the business model, or how you deliver it, or how you support it, or even how you replace it when the product needs to be, upgraded or modernized. You may have, right, selling things as a service. I could sell you this computer as a service. And it's the same yoga computer, right? But my differentiation is that you rent it from me and you don't have to spend in capital, you only spend on OpEx. So there are many, many ways to differentiate, but it's absolutely critical.
We have a lot of new entrepreneurs that have, joined the ranks of business ownership over the last couple of years. I think there are 7 million new businesses that were formed or incorporated. So you've got a lot of new business owners out there that are looking for, to grow their businesses, and they're looking for investment. So, I know investors are certainly looking for those companies that are a little bit more mature, looking for that traction, looking for that, the traction of revenue, growth over time. What about the new folks who are just starting out? There are so many of them, and they need to raise capital, but they have maybe they're pre-revenue. What is it investors would be looking at from those brand new business owners that they would even engage in the conversation with when there's no revenue yet on the table, or in the books, I should say? I get that question a lot, so I'm asking you.
There is only a couple of answers, right? 90% of the investors, apart from looking for the vision and some idea, obviously you are talking about very, very, very early stage here.
Right.
They want to see that you have your skin in the game and that you are bringing some seed money yourself. Okay. It's about statistics show, right? So it's your mother's money, or your brother's, or cousin, or your neighbor.
Skin in the game. Okay.
Or some crowdfunding or whatever. But they want to see that at least you have put some of your own money in it and you started to work on it. That will do magic in getting the investors to want to help.
They'll take you seriously, is what you're saying.
Take you seriously.
Okay.
I'm also member of a number of incubators. Being a member of an incubator, if you are really starting right from scratch,
very beginning.
They provide a lot of support and they connect you with investors that are really looking for early stage startups. But they also provide you with machinery, with equipment, with training, just from paying maybe $200, $300, $500 per month to these incubators. They offer you a whole
it's like a support network, right?
Yeah, and they have warehouses, they have
access to resources,
3D printers, and they have mentors,
okay.
And they have the connections to the investors. So when the investors see that you are already a member of these organizations, of the incubators or accelerators, and you are maybe a member of a cohort working towards developing the initial prototypes, there are really a group of investors who want to support these early starters. Okay, so it's another way to show your commitment that you become member of the accelerator or the incubator. You start working with the cohort, doing some webinars, seminars, developing some very basic prototypes of what you are doing. Okay. And once you are in that environment, everything is available. It's no extra cost. You have the 3D printers, you have labs, you can do testing. Everything is included in the membership. So it's a low-cost way to get started.
Okay, so this is a great, again, practical advice for new business owners is participate in an incubator.
Absolutely.
So you have access to the mentors, people who have wealth of experience, and each other too.
Yeah.
Are they pretty much focused on technology-related products and services? Is that a fair statement?
Well, they tend to be split into hard tech and software.
Okay.
But it's really all about innovation, right?
Right.
Whether it is hardware or software or IoT.
Right.
But it's all about really, again, startups tend to develop products that didn't exist before, right? So these incubators help you really in being innovative.
Very interesting. So how important is the go-to-market strategy when you're looking at your overarching business strategy for the entire corporation? To me, this sounds like this is, if you get this right, you'll get the funding that you're looking for, right? And that and then the ability to not only plan and have a strategy, go-to-market strategy, but you have to implement that strategy, and you have to be held accountable to the measures that you put into that strategy, right? So, in your experience, what are some best practices for business owners to stay on task, just to make sure that they are meeting their goals and objectives? What are some planning disciplines that you would recommend?
Right. First thing they all need to understand is that the go-to-market is not, like I said at the beginning, it's not something that you start thinking towards the end of the process, right? The go-to-market starts when you start building your company. Right? And it has to be, it's part of the vision, it's part of the value proposition. And whether it is a one page, right, that you said that is the metrics that you were talking about, or a 20-page or 100-page business plan, you do need to be able to connect your key goals to timing, right?
Right.
And to people, because it's kind of a dream to put a list of activities and a list of dates if you cannot allocate that to who is going
So
to,
that's,
to execute it and by when, right?
That, okay, so that, I love that, because, to drive accountability, right? You're going to have your goals and your objectives, what the work looks like, right? So you're in your timelines, so your deliverable dates, but also allocating the resources. So you're allocating the financial resources, because now hopefully you have the funding you need. You have your operating budget. Now you can assign those financial resources, but your people, your team, so that you can make sure that you've got the right people doing the right work, with the right, and making sure that those people have the right marching orders in order to deliver on those goals and objectives. So that's where performance management comes into play here, right?
Yeah, even before managing, you need to get these people in the organization.
Right.
I mean, if you have question marks in any of those boxes, or where you don't have a name, that should be a sign that something is missing there. If you don't have somebody to make phone calls and sell this product, so if the sales line is empty, you need to allocate that to a person. Now, what a number of founders do is that they are the CEO, they are the COO, they are the CTO, they are the CRO and CGO, Chief Growth Officer, and then at the end of the day, they end up working 22 hours per day, and they lose their vision and their passion, and the company shuts down. So having that also pushes you to understand how to complete your organization. And then, again, when you speak to the investors, they will realize that you understand what you are doing, because they see that you gave thought to how this process is going to be executed, how you're going to track it, who is going to do it, and how you're going to measure success. Because at the end of the day, when you check the box, because you hire a salesperson, it's not really, you just need one. But you check the box when you have customers line up, when you have POs, when you have a pipeline, it's quantifiable, right? So also defining success is important for the investors.
Defining success. It's interesting, and you know me, and know that I do strategic planning for a living, and one of the tools that I love to work with is the balanced scorecard, because to me, it can be a plan on your business strategy on a page, and it can house all these different objectives and goals that include your go-to-market plans. It can include, what you're doing every quarter, what your performance metrics are every quarter, what the work looks like, the projects, and who the resources are, and then by doing that, you'll have an understanding of how to drive performance management within your team. So you've got because your people are your greatest resource, right? So you're looking to investors for the financial resources, but ultimately your ability to implement positive change or implement that strategy is based on the team that you have in place. So you have to be able to share this whole vision, this whole strategy with your people, and then have that drive down into the performance management of those people, so that they're focused on the right work, right? And then driving accountability. And it's just another best practice that I found in the work that I do is when employees come into work every day, everybody comes into work, they are, they want to do the best job they can do. They're happy to be there, and if you as a business owner, business leader, can show them why their work matters, why they matter, why they're in the job and maybe not somebody else. They're in the job because they've got the skills and talents to implement and execute. And you lay this all out in front of them, so they know that their work is meaningful. They know that they're valued, and then that has other benefits. So you're driving accountability and performance management, but you're also driving things like employee retention and employee satisfaction. So you start to use some of these planning tools, where they're really driven about, to drive growth for the business, to meet your financial objectives, but you're aligning your entire organization towards these overarching goals. And that's a great way, and that will drive success because you've got your entire team aligned to that strategy. So it's cohesive, it's aligned, everybody's working towards a shared objective and common goals. And I think that's also really powerful.
If you can if you can show to the investors that, number one, your whole organization is aligned with the vision and they embrace it, and that they find their jobs meaningful and that they are fulfilling the vision, they will appreciate that. Because again, a failing organization is one of the 12 causes of failure of companies, right? So the investors want to see that your organization is solid, is engaged, that you are a good CEO or president, and absolutely, Forbes reports, Gallup's, McKinsey's report about retention nowadays, especially after COVID. Right. It's all about making your employees feel that their jobs is meaningful, that what they are doing makes a difference out there in the community, and that you recognize that. So absolutely great way to retain your people and attract people, because if you are poised for growth, you are going to need more engineers, you're going to need more salespeople, more people in operations. So people want to work for companies that have that cultural environment.
That cultural environment, and that's how you get to move towards becoming a best company to work for.
Absolutely.
Right? Which is also something that we all strive for, right?
You know, I made once a presentation about employee retention, and I call it retention through attraction. I mean, the magnet retains metal particles not because it grabs the particles, but it creates an attraction. So how do you make the company a magnet for great talent, which not only brings these people, from other companies, but retains the great talent that you have?
Right. It becomes that, that ideal workplace. Hector, thank you so much for such great insights. I really appreciate it. If you were to summarize some of maybe the top 2 or 3 key takeaways you would like our audience to leave with today, what would they be?
Yeah, that's kind of a tough call. But let's say, first of all, be clear on the vision and the mission of your business. Okay. Number 2, make sure that you put all that vision and objective and strategy and tactics on one plan, whether it is the 1 page or 100 pages, but the simpler the better. Make sure that everything is captured. And third, make sure that you have the mechanisms to track the execution and correct if you deviate. And I have some risk mitigation. Many companies have to pivot during COVID or during wars, so be ready to switch if things don't go as expected so that you can keep growing. So that would be the 3 things.
Wonderful. Be quick about it, right? So if you find yourself, trending, in a way that is not, positive, to course correct sooner rather than later. And if you have the right performance measures in place, you'll be able to have that line of sight sooner rather than later. Right?
You have always leading and lagging
indicators.
And lagging
indicators. Another
when you got the lagging indicator, it's too late.
It is too late.
Right. It's mainly to put it in the financial report, but you want to focus on the leading indicators and predict more than fix.
Wonderful, wonderful. Well, thank you so much. Again,
pleasure.
Another great conversation, and you'll come back, I'm sure, and we'll pick another topic and do a deep dive again, because this is such an interesting topic. We hear from our audience, our viewers, and our listeners, and these types of conversations are very meaningful, especially when it comes to planning for your business, planning for growth, ability to execute. Can't execute unless you have the capital, that you need to be able to execute. So thank you again for your great insights.
Thank you for inviting me.
And my pleasure. And Ram?
Thank you, Ram.
How wonderful it looks like. Thank you so much for all of you today that join us for this show. One more episode with Hector. Thank you so much, Hector, for taking the time to come back and talk with us. And I sincerely hope folks, you learn something new about, how to accelerate the growth of your business and how to attract new investors. I heard a lot about vision. So let's go back and refocus on the vision. And please share your comments with us and let us know, what your key takeaways, were from today's show, and let us know where you're watching this show from. So before we go, Hector, how can people find you if they would like to connect with you?
The easiest way to contact me is either through my email, which is info@sextant-international.com, or you also can reach me on LinkedIn as Hector Barresi. So that would be the easiest way to contact me.
Wonderful. So I will post your information here on this video. And of course, Hector just wrote a new article that was just published on IMCI magazine. So the link to his bio is actually there. So his article and his bio. So folks, let's say a few words about the upcoming shows. On November 17th, our guest will be Vanessa Cabrera on Your Winning Social Media Strategy, Confidence plus Consistency equals Conversion. And then on December, our guest will be Carl Seidman discussing FP&A best practices for small and medium businesses. So we're currently planning 2023 shows, and we have a few panel discussions in the works for January and February. One of the panels is going to be women business owners discussing best practices to build, scale, and grow your businesses. And another panel discussion with angel investors sharing what you need to know about raising capital for your business. So Hector, you're going to have to be back to talk about how we're going to raise that kind of capital.
Absolutely.
And how we're going to keep the investors interested, and how we're going to keep the business going.
My pleasure.
So, folks, Ask Deb About Business is recorded at Butterfield Studio in Vernon Hills, Illinois, and located at 1000 Butterfield Road, Suite 1007. Again, in Vernon Hills is located just 25 minutes north of Chicago's O'Hare Airport. With its 7,500 square feet customizable staging and broadcasting space, the studio, with its full-service production and broadcasting team, is sure to service your next conference, game show, product launch, brand activation, you name it. Ask Deb About Business, the hosts and Futures Television thank Butterfield Studio for making this show awesome. We love you guys. And again, thank you so very much for being here with Deb, Hector, and me. Remember, if you're watching this show on Futures Television, listening to it on Radio Future, or listening to it as a podcast or as a recorded event on one of the social media platforms, you too can be part of the conversation. Watch for the links on this video on how to connect with Hector so you can continue the conversation on YouTube channel. And I hope to see you again on our next event, which will be Vanessa Cabrera on Your Winning Social Media Strategy, Confidence plus Consistency equals Conversion. Thank you so very much for being here with us again today, and I will leave you with our institutional message. Thank you.